knockoff for Zomato.
Absolutely, Shrishti. Sharp knockoff coming in on Zomato. In fact, it has cracked almost by another 4% in today's trading session. That's marking a 9% fall over the last 5 sessions as the analysts believe that the best is priced in. And the intensifying competition, of course, in the quick commerce space could play a spoil sport for the company. But to get you details, more details on that, we're joined by my colleague Sharad Dubey. Sharad, take it away.
Looking at Zomato, you see over the last 1 month itself, the stock is down more than 10%. From its all-time high levels, if you look at it, it's down 17%. An interesting report came from Jefferies where interesting data points came, especially from the pressure coming from the quick commerce segment. And of course, if you look at it, they're discounting over the platform. That's the data which we're looking for over here. Zepto, Super Saver, Flipkart Minutes, its peers, they have given a higher discounting levels also. That means the discounting pressure is coming across loyalty programs in the quick commerce space. Now also there has been an aggressive fundraise when it comes to the quick commerce space, and the three large players, Swiggy via fresh issue, they raised roughly $0.5 billion, Zomato via QIP, it was $1 billion, and also Zepto has been in news for a lot of fundraise coming in to the tune of almost $1.35 billion. So funding has increased, and also importantly the discounting that has also intensified. Now so speaking of the intensity, there are two factors going ahead. The first one being the incumbents are planning to expand their dark stores, and also interestingly horizontal marketplace they are also expected to enter. And when I talk about horizontal marketplaces, this includes Amazon as well as Flipkart. Also the key triggers also in the quick commerce space, if you look at it, they include Flipkart Minutes being launched in October last year, and also Reliance, as per media reports, is expected to come in the quick commerce space for the third time. Interestingly, Amazon India is also reportedly working on an Amazon quick commerce delivery space called Taze as well. Apart from this, Jefferies also came out with this report today, and there was a downgrade to hold target price set at 275 rupees per share, and they've stated that they would be also trimming the FY26-27 consolidated EBITDA number between 12 to 15%. Now, of course, the GOV number that's expected to grow almost 65% when it comes to Blinkit, but the cash cow still remains the food delivery business. Also, if you look at the SOTP business, of course, over there the breakup, of course, going in the larger chunk going to the food delivery, roughly around 49%, followed by Blinkit at 49, almost 29%, and going out in Hyperpure segment also coming in single digit when it comes to the SOTP contribution as per Jefferies report.
Well, thank you so much, Sharath, for getting us all those details. Yes, indeed, on the back of the Jefferies note and a downgrade coming in, we are seeing the stock of Zomato down in trade today. But what does it mean for Zomato going forward? Let's revisit Nikunj's take on the same. Let's go across and listen in.
See, Zomato's market cap is 3 lakh crore. 3 lakh crore is the current market cap of Zomato. The stock has seen a run-up of about 150%, 160% in last 12 months. That's an extraordinary run-up for any stock at that kind of size. Now, Zomato has had series of events which re-rated the stock, turnaround of the food delivery business, pickup of the quick commerce business, clear fundraise which was successful, realization that they can deploy their cash flow and start building on that platform from food delivery to quick commerce to now entertainment business which is called as District. But at 3 lakh crore, what else could go right for Zomato and what else could go wrong for Zomato? I guess in the near term, whether it is intensity or the landscape in terms of quick commerce, that in a sense would be a problem. A year ago, Zomato was the only port of call if you wanted to buy a food platform company, and now Swiggy also is there. So it's always this little bit of choice which will have impact on the way how flows would move. And looking at the DMart numbers, the fact that they've also added 10 stores in the quarter gone by, which means that the big box retail is just not slowing down. So one makes an assumption that there is a competition which will only intensify in the quick commerce business. Why are we assuming that the companies which have put in billions of dollars in creating brands like a DMart or a Reliance Retail and other, they would take it light? So I expect that somewhere more than the competition in the quick commerce business, the big box retailers will also make a comeback in order to protect that turf. And that in a sense could really have a psychological impact on the way how the stock is going to move. Now, is the story over for Zomato? Of course, no. The size of the opportunity, the moat around them, the brand, the innovation will keep it going. But at 3 lakh crore, to sustain that kind of a market cap, you need something special. And that special, I think, may not really happen this year. So the stock is going to be either flat with a downward bias, but you cannot make a case that it can give you like a strong double-digit return like it did last year.
All right, that's the take coming in from our editor-in-chief on Zomato and the heating competition in that space. But now we are joined by our guest Rajesh Agarwal, who's the head of research, AUM Capital, and Kunal Bothra. Hi, good morning to both of you. Thank you so much for joining us. Rajesh, I'll come to you first. We're talking about Zomato and how that stock has given some exceptional returns, and now, of course, we're seeing that stock crack 4%, of course, today on the back of the downgrade coming in. But Zomato has been under selling pressure for a while. Do you really believe that the best has been priced in? Of course, the competitive intensity in the quick commerce space is just heating up, and not just from the quick commerce players, but also the stores that are making a comeback to take that market share back from these quick commerce players. Going forward this year, do you see Zomato being under pressure because of that, or what are going to be the positive triggers for this stock?
Good morning, Ankita. Good morning, Srishti. Good morning, Kunal. I totally concur with Nikun's view that double-digit return in Zomato in the near term is not a possibility unless until something big happens, because at 3 lakh odd market crore, it's really difficult to scale up from here in market cap terms. And when you look at the business, there is strong competition, not only in food delivery business because of Swiggy and all, but the main competition is coming from Q-commerce, where they have several players like Zomato is there, Swiggy of course is there, Zepto is there, and many small companies are coming up. Amazon is moving into it, Flipkart is moving into it, Jio might come back because they have closed down recently. So this is the problem with the entire sector as the competition is very high. Food delivery business, I agree that it's almost a duopoly with Swiggy and Zomato taking the lion's share, very small share being with somebody else. Now, if you look at Swiggy, they have launched Bold. That's 10-minute food delivery business. Store count is going up, no doubt on that. Blinkit had a store count of 791 on second quarter of this year. And new stores are being opened in smaller cities like Alwar, Ajmer, and Kochi, like this. They have a target of around 1,000 stores in FY25, 2,000 stores in FY26. But the main thing is valuation. When you look at valuation, trailing P at this point of time is almost 146, and price to book value is more than 10. That's way above any parameters, I would say. Yes, the company is doing well, the sector is doing well, but then valuation comes into picture. And as Nikun said, taking this stock above 3 lakh crore will be a Herculean task, I would say. So at this point of time, we would say to avoid for new buyers or somebody holding can think of booking at least partial profit into this.
All right, that's the take coming in on Zomato when it comes to the fundamental take. Good morning, Rajesh, and good morning, Kunal. Kunal, help us with your take as well. You have been tracking Zomato from the lower levels, and definitely it has given great returns to all the investors and traders as well. But what now, Kunal, back to that 250 odd level? Given the downfall, you believe that at this level, this should actually stop or halt for a bit, or the chart is just getting weaker?
Very good morning to all of you. My belief is that I think the stock should be a very good buy on dips candidate, because my sense is that you rarely see such kind of stocks halting when they see a major kind of an up move. So from a level I think around 50 odd rupees for the stock, which was the major low for Zomato, the stock went up to almost 300 kind of a up move over the last 2.5 odd years. It's almost like a 5x, 6x kind of a move for the stock. It's bound to get back into a time-wise consolidation, but then I think eventually these stocks, they come out to be one of the first ones when the markets find its mojo back, that these are the kind of stocks which typically find their momentum back again, and they come back towards life highs as well as a continuation of the previous pattern. So my belief is that Zomato, I think, could be a good buy and dips candidate. The only concern is that someone who's looking out for returns on a very short term basis could probably be disappointed, because there could be a sudden advent of volatility for the stock. But for someone who's looking at a time frame of say a couple of years or more, I think buying on dips could be a good strategy. 250 I think would be a good starting point for traders with a longer term time frame, and I believe dips towards 225, 230 should be taken as very good buying opportunity or adding opportunity further.
Right, so it's a buy on dips call as far as Kunal is concerned for Zomato, and here's hoping that Zomato finds its mojo back just like the markets do. But on that note, it's time for a quick breather. Don't go anywhere, we'll be right back.